The first section of the trend catcher is the sensitivity. Sensitivity is just basically the buy and sell. Like for example, like to a 4 to 5.5, right? You don't want to go any higher, you want to go lower. If you want to go to the lower time frame, right? You see how it just flipped? If you want to go to the lower time frame, like 1 minute, 5 minutes, and you want to increase the sensitivity, that makes sense, right? But if you really want to see clarities or a little bit less, I try to keep it around 5.5. That will be the clarities in itself. So that's just the sensitivity aspect. So when it comes to the trend band, the idea behind this band is just showing you the actual direction of that, as long as the governing area of this specific section. Obviously this section right here, where even though we're kind of consolidating, but we're still in the negative trend. So right here is a positive trend. It doesn't mean the macro trend. Please do take that out of the way, right? We're using the time frame that you use will tell you what kind of macro or non-macro that is. So I'm using 1 hour and below. Obviously it's not macro time frame. Macro time frame is 4 hours and above, right? So keep that in mind. So all is saying that when it comes to the trend catcher band, right, within the zone that you have here, the price action hitting the zone right here from the top zone to the end zone, as long as we're in this zone and we bounce from it, or we in here, we don't break it, that's still considered to be this upper channels and the bottom channel. So we have right here, it's called the trend reversal. The trend reversal, you probably see it already. It's the one that give you the reversal up and down. Trust me, this is my lifesaver. I created this for one reason. First of all, myself. It's called the scaling ability, but it's not about right or wrong. So I'll be more lenient on do not focus too much on lower time frame reversal, because reversal small time frame could be real quick and it go right back down, right? Focus on the high time frame, you really want to reach reversal. But in terms of a smaller time frame, whether you're scalping 1 minute, 5 minutes, reversal is going to help you get yourself in position. So let's say if I take a long anywhere in this position, and I'm taking a long position, this first reversal pops up and the second one, it's not about, oh, it's going to go right back down. It's preparing to you, let you know that, it's time for you to scale. Every time I see reversal, I move my stop loss. So if this first reversal is right here, right, obviously it doesn't drop that fast. This is my entry, right? This is my stop loss. Originally, let me change that color to red real quick. So originally that's my entry and stop loss. The moment I see that reversal probably pop right here, I will scale my trade. Let's say if I have 1 lot, just demonstration, 1 lot, I do like maybe partial. That's the kind of partial is whatever fit your style. You want to split it to 10 type, or do you want to put it into like a 4? I split it to like 0.25 every times. Now the actual splitting of your scaling of your profits or scaling of your lot size that you're using, you have to ask yourself this question. Am I using this on the higher time frames, or am I using on the lower time frame? If I'm using a lower time frame, I probably need to scale my trade a little bit more faster, because obviously lower time frame, direction up and down pretty frequently, right? Pretty fast. So the difference between a higher time frame, let's use 1 hour. I'm not saying high time frame. Let's use 1 hour's demonstration and first of 5 minutes. So if I'm using 1 lot on the 5 minutes, I can do a fractional 1/4, meaning every time I see reversal, I 1/4 it out. Now by using a 1 hour, maybe I could do 1/5 or 1/8, or I'm just throwing numbers, right? It's really depends, because the 1 hour it take time. The 4 hour take time. So you want to scale as much as possible. That's the kind of thing you need to play with. But the point of the strategy is every time you reversal, my point of goal is I'm just scaling. I'm scaling my trade. The first initial reversal, all I might do is move my stop loss to break even. I don't care about the things going to actually reverse down or not reverse down. The point is that prepare yourself, because this might not happen, right? A little drop, this doesn't happen at all, but this one does. You get my point? That's the thing. Like, you don't know which one, but you are preparing for the one, or maybe this one. You get the point here, is that it's like it's telling you one, prepare, because any one of those could take you away from your profit. So obviously the idea is that if this one is moving down, to take my stop loss and I move the stop to the break even level. This next one, I see reversal, I'm scaling out, now I move my stop loss higher to that position, or whatever that closest to this one, right? This is a stop loss, right? And then this one doesn't happen, so I move up here. So when this thing reverse took place around part right there, right? So what I'm gonna do is I'm gonna move my stop loss higher, whatever that next one, or like I said before, the stop loss is perception, right? So subjective, you can do whatever you want to do, but the point, you scale. So imagine a short time frame, I'm doing 1/4 every time, so I'm just 1/4. So I have left is 1/4 at 0.25 lots at that particular point. So at 0.25 lots, I only have 0.25 lots, so I got taken out right here. If I were to put it right there, I still make 3 out of 4 of a lot, so 0.75 lots, and I make profit on the last one, 1.4. See what I mean? If you walk away and you didn't scale, this might be the one that took your stop loss. This might be the one that took your stop loss. This might be the one. That's the one. It went right back and hit you the same entry that you started off with. You let the whole entire profit walk away from you right back at here. This happened all the time. So this is the reason why I create this method, because I'm a scalper on a very small time frames. So I need to warn myself is I need to, hey, you know what? Alert. I need to move my stop loss. I need to scale my trade. The key to being a profitable trader isn't about getting the right entry all the time. It's about executing the actual profit that you have. How do you manage those key things? Because we all understand how we manage stop loss, right? Or we manage losses. Easy. You just, when it hits your stop loss, you lose. How many of you guys can manage your profits? That's the key part. So this particular indicators right here serve that purpose. It's there to kind of give you a warning that potential, that big one might happen, or the medium side might happen. You're always hoping that it never happened, but at least it's giving you the alert that, hey, we're reaching a certain key area that you might see that reversal, right? So the higher the reversal, the higher the time frames versus the lower time frame, the difference between them, whether it's using 1 hour, 4 hour. When you see reversal on the 1 hour, the 4 hour, it takes time. It doesn't just automatically happen right now. Obviously, it takes a little bit longer time. So with the reversal point, starting from the 1 minute to, let's say, 10 to the daily, right? It's the amount of what we call durations, how fast. So if you see in the 5 minutes, if you see the reversal in the 5 minute and the 1 minute versus the daily, you understand that it's going to happen now or very soon. This is going to happen maybe today, tomorrow, next day, next week. The continuation of that direction. So the reversal point is on cue. It saved my life a lot of times. Honestly, when I'm scalping, I walked away. Then I set the reversal alerts. Or when I'm actually like trading, I just don't look at the chart. Sometimes I'm doing editings or whatever. I see the alert pops up, say, reversal, and I look back, I'm like, I need to move my stop loss. See, that's the kind of thing that helped me. So hopefully it's going to help you. I'm not saying this 100%, right? But just keep in mind one thing. Every time you see reversal, it's going to be a small move or a big move happening. It's pure as that. So you see right here that this is going to save you. This is a reversal. That's reversal. That is the reversal. That's a reversal. I mean, there's nothing in this world. It's going to be perfect. But if I were to put a perfect label on it, this would be the now. So when it comes to support and resistance levels are pretty much automated draw based on the price action between the buyers and the selling pressures. The smaller the time frame, the weaker it gets, right? You don't base your life on the 1 minute, the 5 minute, 15 minute support resistance. You base it on the 4 hours, maybe the 1 hour, the 4 hours, and daily. The support and resistance levels on the 1 hours, right? Here's a couple things you need to take a look at. When you have two combined support or resistance level right near each other and become a superior zone, that zone right there becomes solid. When a zone becomes single individually, it's still solid, but it's solid depending on the volume. So there's no volume, obviously it's not going to break it, but there's some volume, I wouldn't put my life on it. That's what I'm saying, right? So this is where it kind of goes with the analogy I'm teaching every single week. Is when it comes to support and resistance level, one thing you got to keep in mind of, and this strategy worked for me all the time, if you those got to use it, you just understand the powerfulness of it, is that I would never, ever depend my life on any resistance or support level if it's stuck too long at that level, right? It's stuck too long at this level. Even this one get down, play around with it, but it wasn't hanging in this level. It was tapping this level and it's trying to move away from it. This one right here specifically on the actual 1 hour is hanging around there. It's actually hanging around that particular zone. So that level wouldn't be my ideal, but you get my point. That support level in a 1 hour is decent and not my life dependency on that. Right, so I'm more of the type of person that is going to base on the 4 hours and above. But more importantly, if you're trading, 4 hour would do for me. It's really the support and resistance level that's going to create the zone for you, right? That zone. So the zone that I'm talking about is going to combine with the actual market pulse concept. So the market pulse concept, and I'm just talking about the market pulse concept in terms of the support and resistance, because the market pulse concept comes with another support resistance. When you combine them together, right? What's going to happen is that it's going to create you what I call the weakness in the weakness one, the one that doesn't have any highlights. It's just there. That support or resistance level is there. It's great. It's stronger than the 5 minutes or whatever, but it's not something you want to depend your life on. That's the thing. When I get the highlighted version, right, the semi-highlighted version, that means that one is a little bit more stronger. So I can put in from perspective, let's say example 1 to 10, 10 being the strongest. Let's say this one is between a 1 and a 3, right? And this one is between a 3 and maybe a 6, and this one like a 7 to like a 9 or a 10, depending on the volume, right? So the more highlight you see when those two combine together, is letting you know this is key, that is key, and this is major key, and this is another key one right here. Everything here just support resistance or measure if you were to use combine or individually, but if you combine, that's what the outcome is going to be, is bringing two different universe into one perception. So when I'm using support and resistance level, what I'm using for specifically is identifying my ranges. And you guys know my ranges that I'm playing with. I'm a type of trader that I don't try to forecast the future, because no one can predict the future. Doesn't matter who you are, you can't predict the future. We can't. We don't have that ability. I don't have that ability. So instead of trying to predict the future, I'm gonna try and predict the ranges. So if I'm trading, let's say AUD USD, if the price were in this particular range, all I'm saying is the same thing with Bitcoin, right? If we're in this range, all I'm saying is do not try to take trade in the middle. If you are, just make sure you get a tight stop loss. But if price get near the top, to get near the bottom, all you do is take probability based on support and resistance. Until one side breaks from a closing perspective, that direction changes. Right? If it doesn't break, you're still in this zone. So all I'm doing the higher time frame is I'm looking for the ranges so I can understand myself. So in this pair right now, if we're in this situation, I'm looking at myself at 0.669, that's my top, 0.65406, that's my bottom. So whatever the price fall into during that particular trading zone, I know, hey, you know what, I'm in the middle, so if I'm taking trade, I'd be a little more risky right now, but at least you understand your risk versus blindly taking everything. Different time frame is really more of identifying my ranges that I'm in. So right now, as you can see, if I go back down real quick before I move to the next one, I want to spend too much time. This one is that when it comes to the daily and the 4 hours, all I'm saying is like the daily take a longer time. It could take more than a couple of days to weeks, maybe months, right? If the ranges it is giving. So once you see any price actions or any particular market you're trading, let's say imagine you're trading this one at 0.65273, as long as the price closes above on the daily closing, that means that direction from here have a tendency to reach up to there. Ultimately, it doesn't have to reach all the way up there, but I'm saying the direction of the biggest room it has to work with is all the way up there. So the foreseeable future, while you have the halfway through and you came back and test this level, if you understand your daily ranges and your 4 hour ranges, when the price hit itself down to this level, are you going to short? Are you going to wait for it? Are you going to take, think about this. You're at this major resistance, now becomes support. Now this level has become key support. Now you're not going to check your short here. You should hopefully take a long entry around here somewhere based on probability. Next one is going to be momentum reversal point. So the idea behind this is that it's showing you the momentum, right? It's almost like a Sniper X1 incorporated into here, is that it's measuring the actual momentum in terms of price action. As long as the green X pops up and the red X doesn't pop right next to it, then obviously there's no counter. But the point is this one. It's as simple as that. It's measuring momentum. As the momentum here, it detects key level. The next one is going to be what? It's going to be the trend line. All right, the trend lines. So the idea behind the trend line, the yellow is what's current, and the actual faded gray is going to be historic. So historic data mean that when you're trading in this aspect, that you have the change it in the larger side for the recent lines, the historic lines, obviously, but the actual numbers right here, I don't recommend go more than 3 or 4, because you don't want to go too much, right? If you go 4, it's going to create more historic path for you. Historic path means it's going to add more specific line that it detects from historically, right? So it's going to add more that it see like this is potential, and historically that's potential, so it's showing you way too much you should have. So keep it in the realm of maybe 3 to 2. They only show you 1 historic or 2 historic and then 1 recent, because what it's telling you here is that the key thing here is that we don't have time to draw a certain aspect, right? So when you increase the overall number in that indicators, it's going to draw you the possibility between 2 connection point and 3 connection point possible. So in theory, when I'm looking at the 2 perception right now, when it comes to trend line, right, it has this one original perception, and it had this one original right here as the, you know, kind of like the upper triangles, but they have another historic line right there. So you can see the historic line matched with this one. So you can see the possible outcome. You have one that was going down slanted, and now it's going to build itself upways, and when it is upway, now it's building this little sideways channels. So it's there to kind of give you all that possible vision of the direction. It doesn't mean it's correct, right? But it's kind of give you the clarity in the position. I use it on the phone, so I don't got time to sit here and draw every single line, right? Just I can't do that. So it's going to manually draw that for you. That's what it's serving that purpose for. So keeping it small. The higher you go, the more line it would draw historically, which just make more clutter. So I would, you know, trying to keep it into 1, 2, 3, maybe 4. I wouldn't go too crazy at it. The actual VWAP we have here is dynamic. Calculate itself to find you the maximum threshold that the price action, whether it's directional, that is, whether it's up direction, down direction, the certain key level that you need to break for you to change yourself from that direction. So if I'm in the up direction, it's measuring this line that within this parallel line, right about right here, right? You need to break that line, whatever that price is doing that line, for you to change direction. It's not telling you that when you break, you're gonna go down to here, you break it up to here. It's just telling you that there's certain parameters that the indicators is measuring. You need to break a certain parameter or certain area based on force. Sometimes you see VWAP, the line closes below the actual VWAP, it changed red color, but it never breaks. Break means this thing snap above it. So it detecting actual true volume within it too. So here, you break it, you went down. Right now, it's telling you that within this parameter, you need to break this level, whatever that price is, close above it for it to change direction. Uptrend, downtrend, that kind of perspective. You can see once you break that level. So for me, how I use this particular strategy is pretty simple. On higher time frame, right? On higher time frames, what I want to see, and this is me making a reading based on the VWAPs, right? So if I'm this parameter right here, let's just say example, I'm at this price, the price at 0.66028 or wherever right here is 0.65923, depending on where the time frame you're looking at. You need to see AUD USD go up. I need to see you break it, not closing above it. Doesn't do anything to me. See this right here? Closing doesn't do anything. That's the key thing. The traditional VWAP, you can close above, below, it doesn't do anything, but this one does. When you break above here, you see how it broke. It doesn't matter price retrace a little bit. All it's telling you that as long as the price is above this level, whatever that level price range might be is, as long as we don't touch it, break it, or anything like that, we're still going up because you're governed by the direction of the VWAP. And you see right here, anything go up, you retest and nothing happened, right? So for me, 2 ways I'm using this. One, on the high time frame, it's kind of give me that macro view on the area that I need to see. If this thing ever break this turnkey level, that is directional change if it's broken. But if it's retesting this level and it's not broken, that's going to be some potential long opportunity based on the direction, right? That for me, that's what it's 4 hours. I'll be more kings, daily I'll be more kings on the aspects itself, right? So here you go. Right now, hasn't break that. So for me right now, you need to break that level. You need to have this, let me get the price in here real quick, whatever that price is. Ooh, sorry, that was bad. 68047. So for me, from a macro perspective, from AUD USD, you need to break that. Break that with the snap of it. If you don't break that and you retest how it is right here, and you continue, this, in my opinion, is still an uptrend based on the volume price average. That's all I'm doing. Within the short time frames, you keep in mind, I'm not trading the same way I'm trading on the upper range, right? So imagine I'm here and you break this level right here. So my king level is here. This is the parameter I'm working with. If I am longing, right? If I'm longing, for example, that's my target. It's always going to be my first target on the short time frame. It's I'm longing down here somewhere, or maybe here. I'm going to target that specific because price always have to, if they want to go up, that is, retouch that, or at least retest that aspect. So you can see right here, right, the price went up. Like I said before, it's governing bodies. As long as it's still there, when you add, if there's any support and resistance level, let's see if I add another support and resistance level right here, king. So I'm not sure if it pop up, the price might be gone already, so we'll see. So originally that was a support level. This is where I say the confluence and the combination play matters. So when it's short time frame, I see VWAPs, I see support resistance level right here. one thing for a fact, I'm not shorting around this range. But one thing for another fact is I'm looking to long this aspect and stop loss myself below. So any range below here, let's say example, if I'm just ranging myself or anywhere here, my stop loss be right below there, right? My target zone right there. I could be wrong. You know, take me out. You know, just take me out if I have to, because I'm playing this range and have this key support. Right, I'm not being adding Sniper X1 to it because that's not part of the strategy where I'm showing. But the point I'm trying to say is VWAP is governing. See that? You break above it, but you didn't close above it, reject it. You did not close above it, continuation. So the point idea is that even though you snap, not a lot of time about whether once you snap a VWAP and you break it, you have to go all the way down. It's telling you the potential of that direction. But if you want to change that, sometimes it does this reverse or fake out on you, and it doesn't happen, and it will continue. Remember, you get what I mean? So here's the same thing. If you did this fake out, come back down, and you're trying to retest it and you get rejected, you will go back down. But if you retest and you break it, you go back up. That's the VWAP is for. Now, here's the next part, which is the last feature in this particular indicators. It's going to be the ultimate trend band. I'm trying my best not confuse this one. Okay, so this one is trend. Just simple as that. Just trend. So what I want to do is this. It doesn't react to the price. I mean, the price hit it, doesn't do anything. But it shows in terms of color. It shows me the macro trends that I'm looking at, right, from a perspective. So it's kind of like the VWAP, but the only different VWAP is that the VWAP react to the price action. It will move itself towards the price action, right? It will move towards it and it will show you some support resistance level. This one show you the governing lines based on its perception. I have a tendency to use it in the higher time frames, or I can use a lower time frame too, but the idea of this one is false breakout. Right, this one is a false breakout kind of type of analogy. But when you close below here, it doesn't have any, it doesn't do anything. That's a fake out. Up here, it's kind of almost like a VWAP, but even close it down here, you see, it helps you get the vision of how strong this uptrend is. So in the price action go up here, you drop decently. Let's use some Fibonacci retrieving tool real quick to see exactly, let's say from the low end to the top end right here, how far did it drop, right? So that's about close to 50, right? Close to 50.5. I mean, that's a pretty decent drop. Hasn't changed color. Hasn't changed. The moment it changed here, it started go down more. The moment it break up here, you know, go back up here a little bit higher. So the idea behind this one, you can use it on the actual lower time frame. Right. I won't be too keen on it, but usually what I explain to people is that I have a tendency to, I haven't used this 100%, so I'll be very transparent that I use more of a, like what I just mentioned for, but I do exercise this and I explain to some of you guys use it in this way. You guys are using it in with the actual buys and sell. What sensitivity change? Right now I'm just leaving the way it is. So imagine I'm leaving on the 15 minutes, for example. I will not short anything with a green and I will not long anything with the red. Well, based on the buy and sell. So this is buy, okay, cool. This is red, I'm not taking it, right? Because it's still in the green aspect. This is, you know, green with the buys, go for it. Reds, you know, office, go for it. Same thing here. You can see as we continue to go, this one, you know, I wouldn't probably take this one. Even this one, you know, end up with it, but it's pretty close by. But what I'm saying is that that one wouldn't qualify. This one qualifies, right? This one qualifies. You can see I continue to go, just keep within that range, and when there's a sales and there's the negative in terms of that price action, this one didn't yield that much, but you play that, you know, the stop loss strategy. You won't hurt yourself, right? You won't hurt yourself. You see, we go back far. How far can we go back? In a smaller time frame, it still work magical. Just let you know that it doesn't react to it. So understand the difference in that. So even right here, it doesn't react to it. Until this thing break, it doesn't really confirm anything. So how you want to use this is going to be very much subjective. Whether you want to use what support and resistance levels, got to be key. Got to use that. That's going to be the number one thing. And the trend reversal has to be key with it. Now, this is where the subjective matters, right? Whether you want to use a trend band, VWAP. Very personal on that one, right? So it's really dependent on the styles. If you want to see more with just a guidelines of your parameters, use a trend band. You want to see them react to you, so you can kind of base your parameters and react to your price action, VWAPs. So let's say I'm using VWAP example. So because I'm, you know, looking at that perspective. So here's the thing. When I'm using, going back to the full fundamental ideas, is that when I am looking at myself, looking at the high time frame, going back to what I said before, I want to see the ranges I'm working with, wherever the price action, right? The price action is in the range. I'm a lot closer to my resistance than my small supports, or, you know, continue along in this area, it'd be you know, questionable. But when I see reversal. Almost like it's magical in my sense, is that when I see reversal, it's just letting you know it might not happen now, but that direction is soon to change in somehow, some way, in some shape. That's it in that perspective. So I'm looking at it. If I see reversal, at least I know, you know what? If it's reversal around this particular section, I'm looking at this direction. I'm looking at this box. So if you break that, yep, that reversal continuation for me, I would do it. You break the VWAP and everything, that reversal clean to it. But we haven't break it yet, and we're retesting the lows. That doesn't mean this reversal is not valid. It's telling you that the price actually looks to reverse. Since it's a daily, it takes time to play out. So I'm trying to catch it more towards the support level. No right or wrong. Put your stop loss, because it doesn't matter about right or wrong at this particular moment. When it gets down to 4 hours, same thing. I'm looking 4 hours in my time frame is what I use to confirm my higher time frame, using as the higher time frames for the macro view. That's it. I just want to see, hey, did we break this level? We hold above it. You know what? I can no longer short. I'm not saying short right is long, but this is the only way, just based on confirmation. We have everything is above it. I just don't know how it's not to be. So if I do see a reversal on the 4 hours, just taking this in consideration here, wherever that is, just keep in mind that there's going to be some wiki action. But the first area I'm looking at, depending on how close your support, how close your VWAP, that'd be my first two keying spot, 1 and 2 area right here. Where do I see? That's going to be my level of engagement. If I were to short, is that level, and whatever this level is going to be my 2 level I'm looking at when the price action fall. If it doesn't go that far, it's great. But if it does go that far, I want to see how it holds. So that's going to be that particular strategy. But me recommend to you guys, stick to the 5 minute. If you're not experienced traders, don't get onto 1 minute, because 1 minute move very fast, right? And specific when the market is manipulating, meaning that we have lack of the actual volume in the markets, and especially holiday season, you can see things go haywire real quick, right? So my idea behind this is pretty simple. I use this particular strategy is to understand myself. So imagine you see right here, let's say on the 1 minute, as the price action drop, you see the first word. That doesn't mean that you have to long yourself, right? It's just telling you that, you know, what you're looking to reverse is self. So this is where the second part comes in, which I'm going to incorporate that on our next session. We're going to incorporate it together, is that when I'm at a key level and this thing is broken, right? Broken here, and I have this momentum to tie with it, that let me know that I'm having this down direction scalping, that is. So for me, if I'm scalping, I mean, that's almost like a 60, 70 points. Man, that's still a decent move right there. So when I have such fading in the momentum, it's faded. And I see reversal. Faded plus reversal. This is faded, but I'm talking about this type of faded. All I'm saying right now is that if you haven't scaled your trade, scale it out. If you're looking to get scalped, that's fine. Just have to understand 2 conditions must happen. One, look at your market condition, or is it moving, you know, decently? If it's not, then if you are scalping that type of market, you expect yourself in the return be very, very minimal. So let's say, example, you have the reversal right here, right? Trying to get myself the lowest point possible. Trying to get myself the lowest point possible right here. And the first target I'm gonna target, at least for scaling or either the reversal or whatever, is that VWAP. It's the VWAP. Oh, it's that VWAP. And then I'll target this next one is the next resistance level. So keen on that one. And the next session, I'm gonna show exactly how to resist, because I have like 8-9 videos on it, this particular one. But that's really much the first area it's gonna have to tap. Is that VWAP right there. That's how you do texture and price action. So when the VWAP is hitting very close or getting approach it, one of the strategies I have is always the break even strategy. Is that no matter what happened, the price moving 20 points, 30 points, anything like that, I'm moving my stop loss to break even. You know, moving up the higher to the where the fees that I have, and if I'm there, I'm targeting that. Right, I'm targeting that specific area. That's the first scaling. But if the analogy tips for this week too is when you come to your trading and you're scalping, the biggest issue you guys are scalping on is that you're not picking your market conditions. When the market is not barely moving, it's barely moving, and you're scalping, and the market go up a little bit, and this thing show you green a little bit, and it just drop down on you because the market's not there. I mean, the market is not there, and the market already showing you right now that when the price was going up here, if you've been through a different session, what I don't want to see when it comes to momentum is 1-2 continuation. I don't want to see 1-2 and then you're starting to get faded, curve, getting weakened in the actual momentum. This is letting me know around this particular zone right here, that's weakening of the actual market. That's when I jumped in and scaled my trade right here and move my stop loss if I haven't do so to break even. Scale, because I don't like to see it curve, right? I'm not saying it's right or wrong. I just want to be very cautious. So this is one of the things that made me become profitable by pennies, right? By dollars. And I'll be profitable, not because I'm the best trader in the world. It's because I know how to manage those risks, right? I don't wait for this thing. Well, this going to go over here, up here. I don't play that game. You as a trader, you cannot just hope, dream that the price will go to whatever you're looking for. Sometimes market gives, majority of the time market doesn't give. So when market doesn't give, how do you react to it? So I scale. Like, I don't like to see a curve, I scale, but I still have my target right here. The first target's right here. So let me zoom it out. My first target right here. The final target somewhat if the market's not moving, but my first target would be right there. Well, the point is I already scaled out because I see it's curving in ideal when it comes to this indicator, right? This indicator is measuring, I'm sorry, I'm going across it, but it kind of go together. See that first target? I set the scaling, hit it on the dot, That's it. But the thing is that I'm using in conjunction with this. This two had to go together. Trend catcher and Sniper X1 passed me many 3 prop firms, and you know, trust me, it make me decent money. I'm not gonna say how much I make, but decent enough for me to live, right? So the point is, you have to understand that when it's starting to curve like this, all I'm doing is just scaling out, move my stop loss, still keep my same targets, but I'm being very cautious because this could reverse on me. Right? Because I understand the market condition I'm trading is very weak, so I gotta be more, you know, I gotta be more attached to it. I gotta be more reactive to it. Right now it's decent. Show me some decent, but the market isn't moving. So the tip is, when you're trading using this type of strategy, you have to ask yourself one question: what type of market condition I'm trading right now? Is it slow? Is it ranging? Or is it really moving? Right? Just keep in mind, this indicators trading. You don't need to trade any particular, you know, market open. I mean, if you want to, that's part of your thing. You believe the New York session at 5:30 is going to open like wildly and move a lot. Doesn't matter. This thing is catching momentum, is catching the move, and that's what it's doing. The stronger the move, the better this thing exercise. So just keep in mind, because it's measure momentum. The stronger it is, the more continuation. So if it gives you green, it will run green for you. That's the key thing. So if you continue to see, and I'm just kind of play this scenario out. See right now, if I see this WAP, you'll have exit, and obviously you still have this thing going on. So you already scale out your first trade right here. First trade right here. Second, you know, if you're doing what, like I said before, when you're in a smaller time frame, scale out like 1/4 or whatever it is. So I'm like 50% out, right? You're not making pennies or maybe a couple of dollars depending on your lot size, right? But I have nothing to lose in this position. I have 50% left in my portfolio in here trading this one trade, and I scaled 50% out already. So the rest of it, it's just money on the table. So now it's either gonna hit this or it's not gonna hit it. If it breaks, I'll hold on, because right now it shows some decent momentum. I'll hold on. But yeah, you're in a new no loss situation right now. Every trade that you get in, prepare yourself for that same analogy.